Well, looking at UBA's latest numbers, I mean, you've seen quite a decline in net profit. What's your overall position on the numbers released here? And are you concerned about the hefty fall we've seen?
No, Alicia, thank you so much. We're not particularly concerned. When you look at our gross earnings, which is a very major index for determining how well we're doing, we grew it by 34%. And this is at a time when we're not, fee-based income is actually declining. So in other words, we're actually ramping up on our interest or fund-based income, which is very important for us. Secondly, it's also the fact that about 11% of our income actually came from outside Nigeria, as against about 5% in the past. So we can see clearly that we're growing our top line. Now, you also noted the fact that we had exceptional items of about 21 or so billion. That amount actually came from an aggressive and conservative posture we're taking in order to bring some convergence between the current practice of provisioning in Nigeria and the IFRS standard that we wish to implement by December. The approach here is that even where we have restructured loans, we have decided to take a very conservative view and make full provisioning for many of these particular loans. In our view, we believe that all of these will turn around at the end of the year. So it's purely our own internal rigorous risk management framework that is actually driving this particular action on our part.
That having been said, Victor, and with interest income having been a major contributor to the company's earnings, in the past, have you become more tempered in your approach towards lending?
Well, lending at a point in time, of course, we've had a conservative posture to lending. If you look at our 2006 result, our loan-to-deposit ratio was about 33%. It was in 2007 that we grew our loan portfolio to about 45 to 50%. So we're in an environment that is a little tepid. So we clearly, obviously, are also slowing down on lending at this particular point in time. But obviously, we'll ramp up as we, strengthen our risk management environment. But as you note, part of that particular exposure came from the capital market. And we all know what has happened in the capital market, some of which the factors have been exogenous. I mean, in other words, they've been driven by activities in other parts of the world. So we believe that a lot of these things will turn around. If you look again at the capital market, you find out that about 55 to 60% of the market cap is all it's all around banks. And so if banks are not doing too well, it does have implication on the capital market. Today, I think banks are essentially undervalued. And what that means is that investor interest in banks would obviously increase. And if that happens, a lot of the provisioning that we have today would also turn around.
Helping things a little bit on your end is the fact that we've seen the African Development Bank award UBA a $150 million capital injection. Just looking at that injection that you've received, how do you see things shifting in the current economic environment in where you're going to be concentrating to drive revenue earnings moving forward?
I think we're quite happy with what we got from the African Development Bank, especially because, in the local environment here, if you look at the structure of our balance, of most banks' balance sheet, it's mostly tending towards the short term, the short end. In other words, you're getting deposits that are short tenured, and therefore you can't lend long. So with that kind of facility that we got from the African Development Bank, it means that we can do a lot more of infrastructure funding, long-term funding, which are very critical for the development and growth of the economy. So we're quite happy about it.
Talking about long-term funding, we've seen quite a few banks decide that they're going to build up their balance sheets once again, making moves to raise additional funds through the bond market. Is this a route that you're going to be exploring at all?
We are looking at it. We are looking at it. There were some hurdles in terms of the local bond market, especially tax issues, which have implication on pricing. But I think once that hurdle is removed, clearly it's a market that everyone should patronize, and we will do it.
What about scale? If we're looking at the sector as a whole, we've got a forecast for consolidation happening in a big way once again in the Nigerian banking space. Are you looking at any targets at this stage of the game?
Well, we're always open to scale. UBA has had a tradition of being at the forefront when it comes to driving scale. Today, for example, if you recall, at the time of the consolidation in this environment, we were the first bank to actually announce a merger. And since then, we have had about 4 or so acquisitions. So, Alicia, I'd like to say that we are open to it.